What's going on, YouTube? What's up, CCI family? Chump Change Investments most definitely back in the building. Now, today, we're discussing open enrollment season that is now currently open in the stock market. What do I mean by that? Well, first off, what I get most as a question when discussing investing or stock market is, how do I get started? So there's many of you that always wanted to get your feet wet in the stock market, and you either thought it's not for me, you have to be super smart, so on and so forth. We're going to put all those misconceptions to bed today. I'm going to tell you exactly how to get started and how to get your ball rolling so you can start making your tons of money in the market. Stay tuned. All right, so first and foremost, why is now open enrollment season? Answer: when you rush to the stores and buy a whole lot of things that you know and love, do you do it when they're at their highest price, or you do it when there's a big sale going on? Basically, that's what's going on right now. Okay, all your major companies, your blue chip stocks, and I'll explain that later, are on sale right now. So you don't want to jump in the market and spend all your pennies when everything is at its highest. You want to do it when those prices are coming down so you can take advantage and ride the wave back up. So that's why right now is very important, if you are an investor or a wannabe investor interested in getting into the stock market. Plain and simple. So now let's break down how you get in there. All right, so keeping it real simple. Step one, you need cash. I don't have any cash. I don't have hundreds of dollars and thousands of dollars in this to put. Stop. You don't need that. This is a wealth building program, okay? You can start with $50. You can start with $100. And now I know a lot of you are getting your income taxes and so on. You're buying everything and anything that you want. And then you're going to start over again until next year. Well, wouldn't it be great if you didn't have to start over again? Wouldn't it be great if you didn't have to wait till next year? Okay, this is how you begin that. With just a little bit of cash put to the side. Now, that doesn't mean your bill money, your car payments, your rent, your mortgage payments. No. Take care of all those things first. As a matter of fact, if you've got any high debt built up, try to break that on down as well. But we all know we use certain little pennies and funds for things we don't need every single day. So take a lump sum of that, put it to the side, whether it's $50, $100, $200, $300, put it to the side. Let's get started, okay? Now I'm going to show you exactly how to do that, all right? So let's say we got our side cash together, and we're going to use a midway number like $300, okay? Shouldn't be much for most of us, okay? Now, if it is, do the math if you want to put in just 100. If you've got a little more, put in more, do the math. We're keeping it real simple, okay? So we've got our side cash put together. The next step we're going to do is to find a brokerage, okay? Now, a brokerage or a broker, simple again. There are a multitude of them out there. You have Webull. You have my number one for beginning investors, Robinhood. Keep that in mind. You have Moomoo. You have Tasty Trade. You have Charles Schwab. The list goes on and on. Okay? Now, which one you choose is up to you. But again, my suggestion, if you are a beginner, something like Robinhood would be perfect for you because it's laid out simple in black and white. Actually, it's black and green, but you get what I mean. Okay? Once you've chosen your broker, for instance, we're going to use Robinhood, you want to fund your brokerage account / portfolio. Okay? Which means you're going to enter a little bit of information into this brokerage app. Okay? Which is simple, all basic information. Name, address, bank, social security number. Don't be scared of the social security number. Yes, you have to use it. Once you've gotten this brokerage up and running, you've gotten it funded with that $300 in it, next thing you want to do is go with what you know. All right? Interesting little story about that. When I first really peeked into the world of investing, I was in the 9th grade. Okay? Now, before that, I'm always interested looking in the newspaper at these numbers that I had no idea what they were. We didn't have the internet and things back then, but I was just fascinated with these numbers and these little letters next to them for some reason. Fast forward, 9th grade, math class, project was given to us about the stock market. Whoever picked the company that did the best within a certain amount of time won. I was no scholar in high school, okay? Trust me. However, I liked this project for some reason, and I chose a company that I was familiar with, which was my mother's company she worked 20 years for, which is CNA Insurance. Lo and behold, unbeknownst to me, that's perfectly what you're supposed to do. Go with what you know. And by doing that, I won that competition, which kept the stock market in my mind throughout my life. Okay? So when I'm speaking about going with what you know, if you wear Nikes, invest in Nike. If you have an Apple phone, invest in Apple. You get the drift? If you order from Amazon, like most of us, every single day, no brainer. Okay? If you've been keeping up in the news with a company that you're interested in, know and love, and you always find yourself talking about it, you get it? Go with what you know. Now, to back that up, secondly, you have ETFs, which are, well, we're going to get into that. You have blue chip stocks, okay? You have mid caps and you have small cap stocks. And we're going to, as we go on, we're going to break each one of these down for you, okay? But as far as ETFs, because it's important, they're exchange traded funds, okay? So, as an example, you walk in a grocery store. You're sitting there looking, I don't know, at the cereal. What do my kids want this week? Well, instead of buying this chunk of cereal, say, I don't know, I don't even eat anymore. Give me an example. Somebody in the chat. But I don't know, Cheerios, okay? Instead of buying just all the Cheerios, okay? Or just all the Fruit Loops, right? Wouldn't it be nice if you could buy a chunk of all the General Mills cereals? Okay? Put it in a better perspective. You're a sneakerhead, because there's a lot of us out there. You love Nikes. Instead of just buying a whole chunk of Nike, and you're looking at the stock and it's not doing the greatest right now, why not go into a sneaker ETF where you're getting a chunk of Nike, a chunk of Adidas, a chunk of Reebok, you see what I mean? They're all bundled in one for you. So That's kind of an example of ETFs. When I'm speaking of blue chip stocks, Apple, Nvidia, Amazon, Google, which is Alphabet. These are what you call blue chip companies. Companies that are rock solid, leading the way in whatever they're innovating. Okay, some of us call them the Mag 7 when you're speaking about the SPY, which is, the S&P 500. We're going to keep everything simple. We're going to break these down, though. But the S&P 500 is an index fund, which is called the SPY if you're doing their ETF. We'll break it down. But anyway, the Magnificent Seven are the top 7 stocks in the SPY. Okay, out of close to 500 stocks that are built into the S&P 500, which is why it's called the S&P 500. Okay. Now, next thing after you choose your companies and you put them into your portfolio, and you divide your $300 how you want to into these individual stocks. Now, no, you don't want to pick, and that $300, you don't want to pick 10, 20 stocks. You want to pick probably between 3 and 5. Okay? So you have a strong base, a strong foundation, usually built up off of the ETFs. Okay? The index funds, things like this. But again, we'll get into that. Next, you want to start doing some research on these companies. Okay? Keeping up with them. Doesn't take much. A few minutes a day, 30 minutes, an hour a day or so on. When you have that spare time, keep up with what's going on with your company, which is called the fundamentals of the company. So you have fundamentals and you have technicals. 2 different things, both important. Equally important is up to you on how you're investing. But fundamentals, most definitely, you have to keep up with, which is how the company is being run. Period. Point blank. Where the money's being distributed. How much is coming in, how much is going out. Those are your fundamentals. Now, of course, some of these stocks are sky high for us beginner investors, such as, say, for instance, Tesla. Okay, Tesla is right around under $300 per share right now. Meaning, you hear people say, I have 1,000 shares, I have 5,000, I have 10,000 shares of this. Well, for most of us, buying 1,000 shares of something that's $300, we can't do right this minute. Okay? So what you do for companies such as that is what's called dollar cost averaging. In short, DCA. You'll hear that thrown around all day in the market. It means nothing more than dollar cost averaging, which means putting the same dollar amount into the same stock on the same time basis, period. In other words, you put $20 into Apple stock every week, or every day, or $100 every month. It doesn't matter. If you're following that same pattern, that's DCAing into the stock. Whether the stock is running high, whether the stock is coming down. What happens is it averages it out and you beat the market every time. Okay? Now, of course, all of this is edutainment. I can't tell you whether to buy, hold, or sell. I can just educate you. Okay? So again, basically, this is how you get your feet wet and step into the wonderful world of investing. Okay? And I can't emphasize enough on the wonderful world of investing. Okay? Currently, I have 4 different portfolios that I run currently. Each one of these, I started with $100 or less over 10 years ago. Okay? Each one of, and they've all been running and growing through dollar cost averaging, research and investing, following the market, and options. We'll get into the options later. What you first want to do, if you're not familiar with the investing world, what you don't want to do is jump into options. Not off the bat. Learn the market first. Learn your buy and holds. Okay? Because right now, again, open enrollment, perfect time to get in. Palantir on sale. SoundHound on sale. Okay, even the SPY, remember that? S&P 500 is down below all-time highs right now. Perfect time to get in on them. Google is down. Nvidia, beautiful price right now. Okay? So, get that portfolio step. Choose your brokerage. Put that money aside and fund that account. Let's get started making you some money this year, so you don't even have to worry about waiting till next year's income tax. You're going to triple that without a problem. Learn the game, okay? Now, nothing's in concrete here, okay? Anything can always happen in the market, but we follow history's marks in the market, okay? And by following history, since 1792, when the market began, the market has created millionaires and billionaires thousands and thousands and thousands of times over. And who knows, you might not want to be a millionaire or a billionaire, but it can get you to wherever your goal wants to be. Okay? So stick with chump change investing, and I'm going to show you how to go from zero to wherever your dreams lie. Thank you again for watching today. Be back with you shortly. I wish you a financially successful and blessed week. Don't forget to like and subscribe. And let's get this ball rolling. Peace.